Hi, this is R Sundar. I'm planning a series of videos analyzing few stocks, whether you want to do investments or whether you want to trade. So I wish to analyze few stocks from both fundamental and technical point of view. I thought which stock I choose for my first stock analysis. There is no prize for guessing. It is none other than Reliance Industries. People always say rely on Reliance. It's a very nice name. It belongs to number one business family in India. But of course, that is not the criteria. Anil Ambani Group stocks also belong to number one business family, which have not been doing very well. But what I like about Reliance Industries, it is the Asia's largest oil refinery. It owns a refinery that can process the inferior quality of crude, which no other refinery can process. And therefore, Reliance can buy the lower quality crude at a cheaper price. That is a very big advantage for Reliance Industries. GRM, is gross refining margin, is much higher than other oil refining companies. And in fact, for entire Asia, Singapore GRM is the benchmark. But Reliance Industries GRM is way above the entire Asia. And most importantly, the Reliance is transforming from commodity play to telecom and retail play. So because of this, re-rating is likely going forward. We will see the analysis a little bit. To see the analysis, I'm going to use a website called Ticker Tape. The Ticker Tape, best financial tools in the market to analyze. And this one is promoted by Zerodha, a leading broker. So I'm looking at this. We can click stocks and Reliance Industries. Right. Okay. First, let us look at the past performance. How did it perform in the last many years? And if you click the maximum, and you can see this was the Lehman Brothers collapse time. So it was trading around 500 rupees. And you can see for almost 10 years, it was trading around the same price. So this is the biggest problem in investing in equity market. If you put the money in bank FD or any other debt instrument, your payoff is a linear payoff. In stock market, you cannot get the linear payoff. Sometimes the stocks may not perform for 10 years, but in the next 2 to 3 years, it will give the return for the entire 10 year of underperformance. And you can see for almost 10 years, the Reliance Industries did not perform and it started performing from here. So what is the magic word for huge underperformance here is Reliance Jio. So we will come to Reliance Jio little later. So what I mean to say, the market, the Reliance Industries has consolidated for a very long period of nearly 10 years. And after 10 years, it is breaking out. So therefore, this rally is likely to be very, very powerful. But of course, here, this is a corona-related crash. And then it has recovered. The first thing, in the last 1 month, Reliance Industries has shot up by 77% from March low, which no other stock has this kind of credibility. So why it has shot up, we will discuss little later. Now, the main advantage of Reliance now, it is not actually the refining, it is actually Reliance Jio and Reliance Retail. Normally what happens, you can see here, the Reliance Industries PE ratio is around 25, but whereas the sector PE ratio is only about 11. But when they are taking the sector, they are taking this as an energy sector. Right. But now Reliance is not only energy, it is also energy, telecom and retail. So that is why now it is commanding a very high valuation. Normally, commodity stocks command a P/E ratio of 10 to 11 only. Telecom command a P/E ratio of 40 to 50. And retail stocks command a huge P/E ratio. Say for example, if you look at DMart, it is trading at more than 150 P/E ratio. Now, look at the financials and you can see the revenue also steadily keep growing for the last 5 years. Gross profit also steadily keep growing higher, and earnings per share also steadily moving higher, and so on. So all the basic fundamentals are looking really very good. And look at the holdings. Promoter is holding around 50% and mutual funds 5%, and FIAs are holding around 25%. So that shows the FIA's faith in the company. What changed the outlook for Reliance? Few months before, Mr. Mukesh Ambani announced that he is planning to reduce the debt of the company, and he said he will bring down the Reliance debt to almost zero over a period of 1 to 2 years. And he was planning to sell 20% stake of refinery to Saudi Aramco. But then after that, there were so many developments has happened and that deal did not go through. But now, a lot of people coming and investing in Jio. Jio is the magic word for Reliance Industries. And if you see, Jio is actually a mirror reflection of oil. So that is how they chose this word Jio. And ever since Jio came, and all other telecom companies started doing very badly, and Jio started gaining very good market share. Once I was talking to an employee of another telecom company. I told him, how is the business? And he said, sir, Jio आ गया, बाकी सब telecom company मर गया. So he meant to say the Reliance Jio is eating away the market share of all other companies, and all other companies are struggling. And Jio is the biggest gamble in Indian corporate history. That is because when Mr. Mukesh Ambani started this Jio, the entire telecom industry was not in good shape, and nobody was confident of making a good company in telecom industry. And this is a very big gamble he has done it, and it has paid off. And the people say the biggest risk in your life is not taking any risk. So Mr. Mukesh Ambani has taken a huge risk entering into telecom sector at a time when the entire world seeing the telecom companies doing very badly. And Jio made it possible for Indian customers to enjoy voice and data at the world's cheapest rate. And after Jio, the telecom companies are going for consolidation, and probably only 2 companies in India will survive. That will be Reliance Jio and Bharti Airtel. And Jio is keep gaining the market share. On April 22, Facebook bought 9.99% of Jio stake for 43,500 crore. On May 4, Silver Lake bought 1.15% of Jio stake for 5,655 crores. On May 8, Vista Equity Partners bought 2.32% of Jio for rupees 11,367 crores. On May 9th, Saudi Arabia's sovereign wealth fund is reportedly talking with Reliance for a stake in Jio. So even high profile companies all over the world, high profile private equity investors all over the world are lining up to invest in Reliance Jio. And this has given a very big boost for Reliance Industries shares. At a time due to coronavirus, most of the stocks are falling, and Reliance Industries shot up 77% in the last 1 month, and it is trading just 3 to 4% below the all-time high. On April 30, Reliance also announced rights issue at 1,257 rupees per share. Why I am expecting a re-rating? As I said earlier, so far the Reliance has been a commodity play. A commodity industry P ratio is always about 10 only, whereas telecom and retail P ratios command a very, very high P ratio. Right now, the Reliance Industries P ratio is only about 25, and there is every possibility over a period of next 1 to 2 years, this P ratio can go to 40 to 50. That alone can double the price of Reliance Industries, but on top of which the profitability improves and earnings per share will also improve, and hence will be an expansion in EPS, there will be an expansion in PE ratio, so that can translate into a very good price in the market. So even after shooting up more than 75% in last 1 month, it is still trading at 24 PE. Re-rating alone can take the stock price to 2,500 to 3,000. In fact, in the next 1 to 2 years, it is a good stock for long term. But the big question comes, can we invest now? How can we invest in a stock which has shot up already 75% in 1 month? And people say, which stock you have to buy, you decide based on the fundamentals. And when to buy that stock, you decide based on the technicals. So here I have given the fundamental factors. I have given a good stock to buy, but when to buy, you follow the technicals. Another way of doing it, in case if you are not very comfortable in technical analysis, another way you can go for cash secured put. In case if you do not know what is cash secured put, you can watch it here, cash secured put. Or what you can do, you can go for systematic investment plan. So that is another way. But technically speaking, in the short term, Reliance Industries seems to be overbought, but sometime overbought stocks will continue to be overbought for a very long time. So there are few headwinds because of this coronavirus and overbought situation and etc. But if you are investing for long term, so these things should not be a big problem. So therefore, in my opinion, clearly the stock of the year will be Reliance Industries. So hope you enjoyed the video and happy investing. Thank you.